What is going on, everybody? Welcome back to a new video with Tuki Trading. Today we are going to be starting a new series, pretty much a new mentorship series that I'm going to be posting here on YouTube, covering a ton of different topics in terms of trading, whether it's the charts, emotions, psychology, things like that. I have a ton of different videos on a ton of different topics on the channel, obviously. If you guys go in the past and see, but over time you obviously improve as a trader. You have certain tweaks within your trading strategy or just the way that you trade, and that's what I'm going to be sharing with you guys within this new series, because obviously like I mentioned, over time you improve as a trader, you change certain things. So that's why I want to make updated videos for you guys, so we can make so I can provide you guys with better educational material and provide you guys with better videos to actually help you guys take that next step in trading. So let's go ahead and hop right on into it. And for this first video, we are going to be covering creating or drawing out our supply and demand zones. Now, if you do not know what supply and demand zones are, go ahead and actually I'll link a video in the description where you guys can get a more in-depth explanation on that. But just in this video, we're strictly going to be covering how I draw out my supply and my demand zones. Now, let's go ahead and hop over onto the charts real quick. Now, for a quick little explanation about what supply and demand zones are. So essentially, supply and demand is the strategy that I trade with, or supply and demand is the way that I approach the markets. Essentially meaning that the zones that I draw out are simply just areas on the charts where we previously saw a ton of buying pressure come in or a ton of selling pressure come in. And obviously, whenever you have a lot of buying pressure or buying orders being inputted into the markets, price is going to be moving up. And then vice versa, when you have a ton of selling orders starting to come in, obviously price is going to be moving down. So you want to look at your demand zones as the buying zones and the supply zones as the sell zones, right? So quick explanation on that. Now let's go ahead and hop on into how we exactly do that. Now, for the time frames, I am usually drawing my supply and demand zones on the 5, the 30 minute, and then also if I want to narrow it down or get some extra confirmation, I'll lower it to the 1 minute. But for the most part, I'm drawing them out on the 5 and the 30 minute. Now, I removed everything so we can literally draw out some fresh zones together so you guys can kind of see what I'm seeing and why I'm actually doing it. So first, let's start with our demand zones. Now, like I mentioned, our demand zones are simply just areas on the charts that previously provided us with a ton of buying pressure, or in other words, a bigger move to the upside on the charts, right? Whenever we see more volume start to step in, that's what we want to look for. That's what we want to previously mark out, because when price then returns to that price point, the increased amount of demand or increased amount of supply is going to make price move stronger. So that's exactly why we use these zones. So for the demand, like I mentioned, we want to look for a bigger move to the upside, or pretty much just a point in charts where we had seen a aggressive spike to the upside, right? Because an aggressive spike to the upside obviously means that there are a good amount of buying orders coming in. So first, we can see here, keep in mind we are on the 5-minute time frame, so we do see a low being created here, and then we obviously see a pretty strong push to the upside. So what we can go ahead and do is actually mark out the candle previous to that move to the upside, which would just be the black candle, and then we'll just extend that zone out. Now, obviously, it looks like there is nothing to then tap into that zone, so let's go ahead and find something new. Now, keep in mind, when you do draw out your supply and demand zones, price can sometimes take a little bit of time to actually retrace and then reject into those zones. That's why you want to always make sure that you're drawing your supply and demand zones closest to where price is currently trading. But since I'm just doing an example, I'm going back a little bit in time. So let me see if I can find something that makes more sense. Now, perfect. So here is this. So we see Another low being created as well, and then we start to see an aggressive move then being created to the upside. We then see obviously the low being created, the push up indicating excessive amounts of buying stepping in, and then we even get a gap up the next day, obviously showing that at this point buyers started to step in heavier than usual. So we want to mark out that point. So usually how I'm going to be doing it is I'm either going to be marking out the wick of the candle that started the move, or if there isn't a wick, which in this case scenario there obviously isn't, we're just going to be marking out the candle. So let's go ahead and just mark out this black candle. Also, going to be the candle that started that move pretty much. That's what you want to mark out. You want to mark out the candle that started the move, because the candle that started the move is going to be where price is likely to then have, more volume starting to step in when it taps it again. So let's go ahead. Now that we have our zone, we would then want to extend it out as far as we can. And then let's actually just get rid of this zone that we previously drew, so we can just focus on one zone. Then once we have that zone extended out, obviously you would wait for price to then do its thing, retrace and tap back into this zone, and you can see pretty accurately we rejected that zone and got a nice bounce back to the upside. It was actually a pretty strong move to the upside right off of this zone that I literally just charted out with you guys. So why did this work out the way that it did? Like I said, once you find areas on the charts that provide price with that heavier volume, with that heavier amount of buying, heavier amount of selling, the next time price then returns to that area that started that heavy buying or heavy selling, price is likely to do something similar, which obviously in this case scenario, we can see the low being created, we can see a move being pushed to the upside significantly, right? So we created our demand zone, extended it out, waited for price to then tap into it, and we got a beautiful rejection to the upside. So boom, that's going to be one example of a demand. Let's go ahead and do one more. So let's zoom out a little bit just so we can get a larger overview. Now boom, I do see something else here that we can do. So we can do this. This would be perfect. Yeah, we can do this. So here, again, we see a low being created, then led to a strong push to the upside, right? Strong push. Obviously, that strong push means that there were or I guess you can say excessive, but just more than usual amount of buying orders being inputted, because obviously the market's moving all day. It's open for, pretty much throughout the day, but we want to find periods on the charts that are likely to provide us with the bigger moves. And that's exactly why we draw out our supply and demand zones, because those are the areas that are likely to provide us with the bigger moves. So boom, we have this low here, then being led to a strong move to the upside. Obviously, it doesn't look too massive of a move since we're on the higher time frame, but still, it's a pretty decent move, something worth marking out. Now, in this case scenario, you guys can actually see that we do have a wick. So like I mentioned earlier, I'm either going to be plotting out the candle or plotting out the wick. So since there is a wick, we're going to be marking that out, which is going to be this candle here, and we're just going to mark out the wick itself. Not the candle body, but the wick. Oh, let me see what just happened. Okay, let's refresh. Sometimes it acts a little weird. Dun 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 dun. Uh-oh, what's going on? We're getting hacked here mid-video. It shouldn't do this. It should refresh and be good. There we go. Okay, my apologies, guys. Let's go back over to Tesla, and let's find that point in which we were just looking at, which is going to be right here. So boom. So back to everything we just said, we're going to want to mark out that wick. The bottom wick, since this is a demand, we're going to mark out the bottom wick, not the body, the wick. you only mark out the body if it doesn't have a wick, okay? Or you only mark out the body if the wick is too large. For example, if it's a wick this size, you typically want to mark out the smaller wicks, okay? Because you don't want too big of a zone, too wide of a zone. So boom, now that we have our demand, let's go ahead and let's extend this out. And you can see multiple different times this demand is treated as a barrier, meaning price literally fails to break under this, and also we get a nice rejection from this zone, from this area, each time price bounces into it. Now, why do we get that rejection each time price bounces into it? Because previously, this zone, or pretty much literally, our zones are price ranges on the charts. So that's what we're marking out. The zones are marking out ranges on the charts, meaning this range here is pretty much just a range of where buyers were stepping in excessively more than usual, right? That's exactly why we marked it out. Or in other simpler words, this is where we had a bigger move than usual, right? I'm just trying to explain it to you guys as best as possible. So boom, obviously, as you can see, we created that, extended it out, and we got a beautiful rejection each time we had bounced into it. So still, even if you were to take a trade, you can literally take a trade off of this rejection. Your stop loss would be a close under this zone, meaning if price were to break this zone, that's what you can use as your stop loss, and then you can target whatever you'd like for your take profit. So you can see beautiful trade, beautiful move off of this demand zone. So boom, that's going to be your second example of demand. Now, before I switch over to supply, I do want to cover how you can actually get extra confirmation with your zones when you mark them out on multiple different time frames. So for example, we had just marked out that zone on a 5-minute time frame, but if you go to the same exact zone to where, or the same exact zone that you marked out, and you see if you can still draw out a zone on the higher time frame within that same range, if you can do that, that's double the confirmation for you, right? So let's see if we can do that. Now, clearly we see that this demand was started or created right here. Boom, extended out. Now we can see on the 30-minute, we obviously had the same low being created. We had the same strong wick as if it was pushing price to the upside, then obviously led to a move, a push to the upside, right? So that's exactly what we would want to mark out. We'd want to mark out the bottom wick right here and then extend it out. Now, for example, this zone, it's not too wide, but usually, typically for me, since these zones are also what I'm entering and exiting off of most of the time. So since I'm entering and exiting off of them, I want to make sure that my zones aren't super wide. So if you want to kind of make your zone not as wide, to kind of make things more simple, what you can do is instead of marking out the whole wick, you can only mark out about half of the wick. So let's go down just a little, mark out that. So now we can see that we have our 30-minute zone matched with the 5-minute zone, literally within the same spot. And what did I say earlier? If you can match those zones within each other, that's double the confirmation for you, right? That's double the pretty much the market telling you, okay, this is where price is likely to have heavier buying. Or it's just showing you this is where price previously had heavier buying. So next time when price then approaches this range, it's likely to do something similar, right? Then obviously you can see price taps into the zones that we had just marked out, and we get a beautiful rejection off of it. This is the 30-minute too, and it's a massive move, right? So imagine what the 1-minute could look like. So that is going to be that for the demand zones. Let's go ahead and switch over to supply, which is also going to be our selling zones, our selling areas. Now I can actually spot something right here already, and this is going to be this move to the downside here. So just like demand, instead of looking for a move to the upside, instead of looking for a move to the upside, we're going to want to be looking for a move to the downside, obviously, since these are our selling zones. And not just any type of move to the downside, more of an aggressive move. So here we can see on the 30-minute time frame, we have a high being created, then led to an aggressive move to the downside, right? So if we were to mark this out, let's go ahead and mark out the top wick. So instead of marking out obviously the bottom wick, we don't want to do that because we only mark out the bottom wick for demand. But for supply zones, which are going to be our selling zones, we want to mark out the top wick. So boom, we have this high being created, also then led to the strong move to the downside, obviously indicating strong amounts of sellers stepping in. That's exactly what we want to look for and mark out. So we're literally marking out this range of where sellers stepped in significantly. Then we extend the zone out, and as you can see, price does its thing, taps back into that supply that we had just created, or the selling zone that we had just created, and you guys can literally see how this played out. And this is on the 30-minute time frame as well. So the fact that we have such a big move off of this zone on the 30-minute time frame, I can't even imagine what the 1 minute would look like. But still, it just goes to show you that you can draw these zones out on multiple different time frames, and these zones can work out very, very well when you draw them out correctly. Now keep in mind, this video is just going to be how to create the zones. I'm going to be doing another video moving forward on how to actually trade with these zones once you have them created. So stay tuned for that. That's going to be coming out very, very soon. Now, there's one example of our supply that was also on the 30-minute. Let's see if we switch over to the 5-minute and we see how it looks if we can match those zones up with each other, because the double the zones, the double the confirmation, right? And the double the confidence for you to get into that play. So boom, same exact setup pretty much. We have that high being created, then led to an aggressive move to the downside, right? So let's then mark this out on the 5-minute time frame, extend this 5-minute zone out, and as you can see, this zone was treated as another barrier, right? Because that's exactly how our supply and demand zones are treated, as barriers. So it failed to break above this, and we started to reject heavy significantly, obviously, because this area, this price range previously was inputted with a significant amount of selling, and that's exactly what you want to look for when it comes to catching those high volume trades, right? So boom, that's going to be one example of supply. Let's go ahead and find another one, and then we can wrap it up for this video. So let's see here. So for supply, we want to look for a bigger move than usual, obviously. Let's switch over to SPY here, or a different ticker, because we've just been doing mainly Tesla. So let's switch it up. Now I can actually see something right here. Boom. Okay, so as we can see, you have this point in price right here. So we have this weird wick right here, which then started this big move to the downside, right? So you don't need the biggest candles. Obviously, if you can find those big candles and still mark them out, that's definitely still helpful. But another thing you want to look for as well is just a big move in general. And right here, we had a big move to the downside, right? Obviously indicating before this big move happened, right here, this was the point before those sellers started to step in, or this was just the point in general where those sellers started to really step in. Now that's exactly what we want to mark out, like I've been mentioning, right? We want to mark out the point where the big move pretty much happened, and which is going to be right here, because we had this high then being led to the big move to the downside. Now, let me see, I think my charts are bugging again. Let's refresh this. Where did it go? Man, it would be unfortunate to lose that. But if not, it's no worries, because we can... Okay, it should be right here. I believe it is right here. If not, I'm almost positive this is it. If not, it's still a good example of the selling pressure working out. So we have this point before we had that big move to the downside. So we want to mark out the point before that big move to the downside. Boom. extend it out. Now you can see the first time we tap into this zone, treated like a barrier, failed to break above. Now it doesn't look like the biggest move, obviously, because it's on the 30-minute, but if we narrow it down, let's go ahead and change this zone to red so we know which one this is. Go to the 1 minute, and then if we find that exact zone, you can see the first time that we tapped into it, boom, look what happened. Treated as a barrier, failed to break above, and we had a significant amount of selling pressure. Sellers started to step in, obviously due to, this huge move that we had to the downside right from the supply that we had created. So, boom, that is going to be that. Just for some extra value, I'm going to do one more supply zone. And let's do this on the 1 minute, actually. Since we did an example for the 5 minute, the 30 minute, let's go ahead and do the 1 minute. The 1 minute. Now, the 1 minute is going to be relatively, pretty similar, actually, in terms of how we did it previously. So here's actually a perfect example. So boom, what do we see right here? We see a strong high being created, or just a high in general being created. Also, pretty much right here as well, so we can mark out the same thing. So we have highs being created, then led to a strong move to the downside, a strong push to the downside. Now let's go ahead and mark out the point before we had that move to the downside, which would be this black candle right here. Excuse this shirt that just fell. So boom, let's go ahead and mark out that wick, extend that zone out, and as you can see, this zone was treated as a barrier, meaning it failed to break and close above. It was pretty close, right? It was pretty close, but you can see this whole time price is still trading within and inside of this supply zone. And then eventually, obviously, it took a little bit of time, but once those sellers did start to step in and do the magic that they needed, we then got that move to the downside. So that is going to be that. Let's see if there's anything else that we can go off of here. Let's see if we can find the final demand. Let's kind of get a larger overview of things. So here'd be one. So we can see we have a low being created. That low then led to a push to the upside, a pretty aggressive push, right? Let's just focus on this first push though. So once we have that first push, that's obviously an indication of buyers stepping in. Let's go ahead and mark out that candle previous to the move happening, extend that out. You can see next time price then retraces and bounces back into the zone, it absolutely explodes. So that is going to be that. I hope you guys were able to find some value, learn a couple of new things, or just sharpen up how you overall create or draw these zones out. If you guys have any questions, definitely let me know in the comments, or I'm live every single day in my trading Discord community that will also be in the description as well for you guys to join. But other than that, I hope to see you guys in the next video, and peace. That'll be it.